For those worried about rising interest rates, given protracted inflation pressures, Coolabah runs some of Australia's best performing floating rate strategies. Floating rate notes are a type of bond that pay a yield that rises and falls in lockstep with the RBA's cash rate, all else being equal. One global floating rate strategy Coolabah offers is the A+ rated daily liquidity long-short credit fund. The long-short credit fund offers exposure to a global fixed income portfolio, and that includes bonds issued in currencies like US dollars, sterling, euros, Aussie dollars, all hedged back very precisely to Aussie dollars. The long-short credit fund can uniquely go both long and short these bonds and profit from their spreads increasing or decreasing. Over the 12 months to March, the long-short credit fund returned 13 to 14% net of fees depending on the fee class. The long-short credit fund currently offers a gross running yield of about 7.3% per annum. We're often asked the question, how is the long-short credit fund different to the floating rate high yield fund? The long-short credit fund can go both long and short individual bonds to profit from spreads widening or contracting, whereas the floating rate high yield fund is long only, although it can hedge all of its credit risk. The floating rate high yield fund does have a higher cash gross running yield of around 8.1%. Long-short credit fund's running yield is a little bit lower because in addition to bank bonds, it also holds government bonds. Both long-short credit and floating rate high yield are available on all respected platforms. Now remember, past performance is no guide to future returns, and you should read the product disclosure statements to better understand their risks. We also recommend speaking to a financial advisor to better understand your personal needs.